Buy Palantir stock as analysts and investors keep splitting hairs about its valuation. Palantir Technologies stock fell after the AI software company's latest earnings release, and shares have struggled to recover. A big reason for this is the fact that analysts and investors continue to split hairs about Palantir's supposedly rich valuation. However, much suggests that sentiment will shift back in a big way, far sooner than you may think. Let's dive in. Good news, Palantir stock investors. Expect Palantir to roar back higher soon. Welcome to Timely Investment Research. Earlier this month, Palantir Technologies tanked after earnings, falling to the low $20s per share. Since then, Palantir stock has languished at this reduced price level. While this pullback represents just a moderate price decline compared to pre-earnings prices, it's frustrating, no matter whether you are an investor underwater in your position or even if you've held it for quite some time. It doesn't help, either, that analysts and investors continue to split hairs about Palantir Technologies' supposedly rich forward valuation. Taking this valuation into account alongside macro factors, to many market participants, Palantir Technologies appears to have minimal downside and questionable upside. However, it's not set in stone that shares are going to experience a big drop-off. It's also not guaranteed that shares will continue to tread water. Much is in place for shares to go on another extended run, far sooner than you think. Palantir stock, stuck in the doldrums. Interest rates aren't coming down anytime soon. Per the latest data, the U.S. economy is slowing down. With this in mind, it's easy to see why investor enthusiasm about AI stocks has continued to cool. With this macro backdrop, it may prove difficult for these companies to meet, much less beat, what remain very high expectations. Like other stocks with big exposure to the generative AI growth trend, Palantir stock is more or less treading water. If being in the doldrums isn't bad enough, if you listen to the bears, what lies ahead for Palantir makes current price action seem very tolerable. Per the Palantir skeptics, shares are at risk of a substantial price correction, even if results meet rather than fall short of expectations. Admittedly, this bear case makes sense. Palantir may be growing at a double-digit clip, but at its current valuation of 65.6 times earnings, merely meeting expectations just won't cut it. Over the next few quarters, the company will need to either deliver revenue and earnings growth ahead of forecasts or provide concrete guidance as to when growth will re-accelerate. Fortunately for Palantir bulls, this scenario could indeed play out. Overlooked takeaways could clue you in on a big opportunity. Check out the headlines regarding the aforementioned Palantir stock earnings release, and you'll see plenty about how the company's updates to guidance failed to impress. However, it's very possible that Palantir's outlook proves to be very conservative in hindsight. How so? For one, certain key performance indicators unveiled in the earnings release indicate a far greater level of growth may be just around the corner. Last quarter, forward-looking indicators like remaining deal value and the number of signed deals increased by a far greater extent than the 27% year-over-year increase in commercial sales. Palantir also reported a quarter-over-quarter acceleration in growth for its governmental business. Alongside this, Palantir has also placed greater priority on profitability in recent quarters. This comes even as the company is spending heavily to build out its artificial intelligence platform. If Palantir's management figures out how to best balance earnings maximization with revenue growth maximization, earnings in 2024 and 2025 could very well exceed current forecasts. Right now, the market is overlooking these takeaways. Put simply, this works to your advantage. Months ahead of Palantir's latest earnings release, you could accumulate a position ahead of the event that may drive investors to change their tune. The verdict: feel free to buy Palantir ahead of a possible dog days of summer rally. Palantir is expected to next release quarterly results in early August. While not certain, the above-mentioned takeaway could be the prelude to some major positive surprises for investors when it comes to second quarter results as well as guidance for the rest of 2024. In turn, this could drive the next rally for Palantir, even during the dog days of summer. At that point, the market could realize it has erroneously dismissed this stock as being overvalued and overhyped. A higher level of growth and further improvements to profitability will demonstrate that this stock is well worth paying a multiple for today, for the high likelihood of strong growth tomorrow. Taking this into account, ignore the bears, be patient, and feel free to buy Palantir stock while market skepticism keeps it steady in the low $20s per share. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.